Assist you sell way smarter.
Hello and welcome back to another episode of the Reno Sparks Real Estate Market Update, this time for July 2022. Now, the market is changing rapidly. We're seeing interest rates fall slightly, but we're seeing inventory increase dramatically. What kind of an impact does that have on home prices? And what does that mean for our market going forward? Well, you're going to want to stay tuned because there's some interesting information coming your way. Before I get to that, I want to let you know this is for the Reno Sparks metro area only. It does not include Carson, Minden, Gardnerville, Dayton, Fernley, Fallon, etc. Now, if you're in those communities, don't hesitate to reach out. We'd be happy to get you information. We track those communities as well. Hit us up at info@forrenohomes.com. You can call us 775-688-6060, or of course, you can always drop a comment below. This is for the Reno Sparks metro area, single-family residential properties only. This includes condos, townhomes, stick-built houses, modular homes, etc. Does not include business opportunities, lands, lots, commercial, multifamily, etc. Now, this is intended to be a 30,000-foot macro overview of our marketplace. Now, if you have a home you're thinking about selling, or maybe you're getting ready to buy a home and want to make sure you're paying a good price for it in today's changing market, you can get a specific price on your home in a report by going over to our website, forrenohomes.com. You can scroll down slightly here, click on Find Out Now. Simply enter your address. You'll be sent an automated report, and we will follow up with a more detailed report to give you a specific valuation on a property you're looking to sell or potentially buy. So make sure you take advantage of that. It costs absolutely nothing. We just love to make sure people have the best information available. So let's dive right in. As always, we start with the 30-year fixed, because that has, without question, the largest impact on home prices. And I have never seen, as I've mentioned in past videos, I've never seen interest rates rise this far, this fast. It has been a 180 from interest rates under 3% just 6 or 8 months ago to well over 6%. And they've actually dropped, as I mentioned, they're sitting right about 5.3% today, down from 5.75% last month when we did this video. So we're starting to see interest rates maybe stabilize and come back slightly. Now, one thing I want to point out before we move on is this peak right here in 2018, and I want to show you the impact that had on the market and prices. And we're actually seeing interest rates much higher today than we saw back then. Now let's look at the median home price. Sits at $600,000 even. Now this is a combined Reno Sparks. Reno slightly higher, Sparks slightly less, but the combined is $600,000. Now that's down 2.4% from last month. Now, want to be clear, this is for June 2022. Even though this is a July market update, this is for numbers through the end of June. As we're recording this, it's early July, so we clearly don't have all the July numbers. We won't have those to the end of July. So when you see prior period, it means the previous month. In this case, it would be May 2022. And when you see from prior year, that would be from June 2021. So we're down $15,000 or 2.4% from May, and we're up still though 13.2% from last year at this time, where it was $530,000. Now let's look at the total number of homes sold or closed sales. This is where I start to get a bit concerned. Normally, May and June is where we start to see the peak of home sales, and that's where we actually started to see them fall. Now, you can see normally we see peaks here, 550, 600, all the way up to 700 and 50-ish range, 700 range, 650 range. You see here, we didn't even get past the 550 range. We probably peaked out a little over 500, and we started to see fall. Now, you can see we normally peak out in May or June, and we do see a fall, so not at all unusual. Now, hopefully we get that pop-up, which usually happens, or normally you see in July and August tends to be a fairly slow time. Some people are surprised by that. They think, oh, summer is the best time to sell, or spring. Summer is actually tough because you have a very compressed school break, of maybe 6 to 8 weeks at most. People are out camping and boating and fishing and taking family vacations and so on. And given the pandemic lockdowns, a lot of people are out traveling. So you do start to see a little bit of a slowdown. So not completely concerning, but what is concerning is the time in which it happened. Normally you start to see that more in July and August, and then you see a rise in September, October. So we'll keep a close eye on this. But inventory, or number of sold homes, is down 14.2% from last month at 447, and we're down 30.3% from last year, where it was 641 total sales. So something to keep an eye on. Now, closed sales by price. You're starting to see the majority of sales take place between 400 and roughly 750,000. Now, there are some sales at the higher end. Now, one thing I do want you to keep a close eye on is watch the closed sales in these higher end price ranges and see how that relates to active inventory. Speaking of active inventory, let's take a look. Now, this again is good, but also has me somewhat concerned. So it's good in that we're starting to see more homes on the market. And as you can see, we've got 1,178 homes on the market as of June. Now, these are active properties. These are ones you could go out and look at, you could buy. If you're a homeowner and you have your home on the market or you're getting ready to sell it, this would be your competition. This is a number of homes people could go out there and look at and potentially purchase in the market. It's up 38.3% from last month in June, where it was 852, but it up a whopping 200.5% from last year. Now, to be fair, last year was historically low in terms of inventory, number of homes on the market. I mean, it was absurd how few homes were on the market. And that, of course, is what was driving prices higher. Now, the opposite is happening. You're starting to see a rebound in the number of active inventory. We're actually getting back to more normalized level, which is right around that 1,000 to 1,400 range. You see it spike a little bit above there. You see it drop a little bit below. But normally you'd see 1,400, 1,000 to 1,400 in kind of that range. So we're getting back to more normalized. Now, what we got to keep an eye on here is if this starts rising any further, that means more and more homes. That's more competition, and you're going to start to see it have an impact on prices. Now, let's look at the active by price range. And again, see the actives here? If I go back to the closed by price, you see how few homes closed. We're starting to see in the upper end price ranges, we're starting to see more actives hit the market. Now, between 4 and a million is where the majority of active inventory is. Now, let's look at new listings. You may ask, well, what's the difference between new listings and active listings? Well, active listings are homes that are currently on the market and available, that aren't sold, that aren't pending, that don't have an offer on them or whatever. Now, new listings are just the total number of listings, and some of them may already be sold. You know, if they come on the market and in a few weeks they get an offer and they're in escrow and they're sold, that's still a new listing that was taken during the month of June. And we're starting to see this rise as well. So there's more homes coming on the market. 854 was the number. That's up 13.6% from last month and up 29% from this time last year. Now let's look at new listings by price. Again, you're starting to see all the listings come on at 400 to 750,000 is where you're starting to see, or where you're continuing to see most of listings enter the market. Now, this is where things get really interesting. Now, in real estate business, we look at different types of markets that we may be in, whether it be a buyer's market, a seller's market, or what they call a stable or neutral market. Now, a seller's market is one in which there's very few homes on the market and there's a lot of buyers that want to buy homes. And that's where we've been in a purely seller's market the last couple, 2 or 3 years and beyond. And that is because there's very little inventory. There's very little homes on the market. So if you want to buy a home, there's very little to choose from. That means sellers can usually keep raising their prices. They can demand more. There's multiple offers on properties, etc. Now, the opposite is true when it's a buyer's market. There's too many homes on the market. There's not as many buyers looking for them. So the buyers start to gain the upper hand in terms of offering less money, asking for concessions, things like that. So the market tends to soften, or prices generally tend to start coming down in a buyer's market. Now, a neutral or stable market is kind of a 50-50. There's plenty of homes on the market, but there's also plenty of buyers that want to buy them. So you get a very consistent turnover month after month. Now, the numbers for a stable market are right around the 2.5, 3 months of inventory. Now, months of inventory means, let's say you sell 500 homes a month in the market and there's 1,000 homes on the market. You would have 2 months of inventory. If you had 1,500 homes on the market, you sell 500 a month, that's 3 months inventory. So number of months inventory, usually right around 2.5, 3 months is where you would consider a stable, equal, balanced market, if you will. Now, getting below that 2.5, 2 and less is where you start entering that seller's market territory. Now, when you get above that 2.5 or 3, you start entering that buyer's territory. So that's why it's important to take a look at this. Now, right now, you can see, along with interest rates, if I go back to the interest rate chart, you see this? Does it look familiar to this? The spike here? And that's why I say interest rates have such a profound impact on real estate. But we have 2.6 months of inventory on the market as of June, of course. That's up 61% from last month. That's up over 330% from last year, where there was barely a half month inventory. Now, again, to be fair, incredibly crazy times in terms of inventory in the market in general last year and through the pandemic, but we're starting to see this rebound back to a normal market. Now, again, we got to keep an eye on this, because if this starts getting much higher than this 2.5 range or so, you're going to start to enter buyer market territory, and that's when you start to see prices start to drop. Now, here's what's interesting. This is broken down by price range, because look, not all price ranges are the same in the market. Upper end price ranges is going to be fewer buyers. Are you talking about $800,000, $900,000, $1 million plus? Not a lot of people can afford homes like that, and therefore, or of that price range. Therefore, they're going to get hit harder by potential interest rates issues and so on. Now, lower end properties, maybe not the same story, because you have investors, you have first time home buyers, you have people looking to move up. There's a lot more activity and more people can afford lower end homes. So let's look at by price range, the inventory. And if you look, if you're in $1.5 million plus, you've already entered buyer market territory. Same is true for 1 to 1.4. Same is true for $750,000 to $1 million. You're already entered the buyer's market, meaning the buyers are starting to get a bit of an upper hand, only because there's so much to choose from. And we are right there at 600 to 750. You're right at that 2.5. So you're right about that stable market. Any more inventory, fewer sales, you're going to start seeing a buyer's market. Now, if you go to 3 to 4, 4 to 5, and even 5 to 6, you're still just above 2. So you're still somewhat in primarily a seller's market, but you're starting to see this shift. And one chart I wanted to bring up before we wrap this up that I normally don't show, but I thought very interesting, is unsold listings. Now, what an unsold listing means is it was on the market for a period of time, it didn't sell, and it went off the market, whether it expired or the seller decided to take it off the market and it was withdrawn. And you see back, a year, 2 years ago, very few homes went unsold. Almost everything was selling. And right now you have 107 unsold homes, which isn't a ton. So it's not a massive number, but it's significantly higher than it's been. 67% change from last month, but over 100% change from the prior year. So to wrap it all up, the market is changing rapidly. If you're thinking about selling your home, you need to take a good hard look, sit down with your real estate agent, and determine what makes the most sense in terms of price. You're going to have more competition than you had 6 months or a year ago. And just because, somebody maybe in your neighborhood sold for a specific price, or maybe they got multiple offers, doesn't mean that is necessarily going to happen for you. Now, the sky is not falling. The market is still in very good condition. It's still very strong. But again, the next few months is going to say a lot in terms of where the market is headed. So get with your real estate agent, get with us. We'd be happy to help with you. If you're thinking about buying a home, it's a great time to buy. Interest rates have fallen slightly. You're getting more and more options out there. You can be more selective in terms of what you buy. And as always, if you have any questions, concerns, need any help with anything, don't hesitate to reach out. You can visit forrenohomes.com for all of our contact information. It's right here front and center. We have our phone number, 775-688-6060, info@forrenohomes.com. And of course, if you did want to get that free and easy evaluation, click there. And just as a reminder, if you're thinking about selling your home, the market's getting soft. It never hurts to save money. We can save you a whole bunch of money compared to paying 5, 6, 7% or more to sell your home. Sell your home for only 1%. Homes under $400,000, it's only $39.95. So we're going to save you a whole bunch of money when it comes to selling your home. You get a full service experience. We show your house, advertise your house, we run the escrow, we do absolutely everything. The difference is we sell more homes, therefore we can pass the savings on to you. So don't hesitate to reach out. I wish you all nothing but the best, and make sure you stay tuned for the next version in August, September, and beyond, where we're going to keep an eye on this market, and we'll find out where it's headed together. Talk to you real soon. Thanks for joining us. See you next time. Bye-bye.
Assist you sell way smarter.